Okay, this is our Forex blog for May 26, 2011. This is a wonderful day because we just released a version last night and another one today. The FX trend reversal allows you to see multiple time frame trend reversals on 15, 30, hourly, or 240-minute charts. Typically, either the trend is over in the direction it's going now and you want to start looking to buy or sell. And if that doesn't work, what does work with a very, very high, ultra high win rate is buying and selling the next fib target up. So if you get a sell signal at the high and the market makes one more wave up, usually that's the end of the move and you can start aggressively selling it. We also have included today a new alert for trend lines. You see a multi-day down move, you draw a trend line over the bar's high, and that gets broken, you'll be alerted. Audio alerts, email alerts, and cell phone alerts, like all of our other alerts, work. So we're going to reveal that today in our regular class. Like most days, you really want to buy the strong currencies against the weak one. Swiss, very strong today. Dollar was consistently weak. We had a lot of weakness also in the CAD. The pound was very strong from 6 onward. So basically from 6 onward you want to buy the pound dollar, pound yen until about 8 o'clock in the yen, pound dollar until about 10. You wanted to earlier tonight buy the euro dollar, and you also wanted to sell the dollar Swiss, and also buy the New Zealand dollar. So let's look at some of those pairs. Euro dollar earlier in the day, and guess what? This one had a 4-hour narrow range breakout right here, which, these patterns can oftentimes find tremendous trends, and you can see it just exploded up. And this is what I meant by the trend reversal signal. When you get this is I think a 3-hour trend reversal signal here. We had a 30-minute one right here also. The market just absolutely collapsed and fell 150 pips, and it gave you about an hour to start looking for sells. And so when this had a double top here that failed and the market came down, you might have shorted here. You might have been hoping, and this is what I was waiting for. I missed this trade, but I was had my fibs on like that, and I was planning on selling 42.25 to 50 myself. I like to get short big lots above the upper containment bands. In this one, I felt that it might make one more wave up, and sometimes these signals are half an hour to hour early, and you can get into the trade with a 25 to 50 pips better entry price. But that one just absolutely collapsed. But earlier in the day, the euro was strong, dollar was weak. You had this breakout right here, pulled back. You might have went long, bought this pullback here. You might have got into a trade right here that lost, and then when it came down and found support at the Fibonacci area, you might have had a trade here. Dollar Swiss, very weak earlier in the day. Let's look at this one. And it went sideways right here and broke down underneath the previous day's low. A lot of counter trend buy signals right here, so good. These are excellent for not only looking for counter trend trades, but also for when the market goes down and goes sideways and you have a lot of counter trend buy signals, you might want to get out of that trade with only 15 pips there. On the pullback up here to the hourly, there was tremendous strength, but if you went short right here, you probably would have had a losing trade. Short again here, small win. Usually when the market comes back up to the hourly, it's a pretty high probability trade. That led to a 20 pip move, and you have this one right here. Now, some counter trend signals showed up, and usually the triangle is the end of the move. So this is actually a trade I took, and I had to scale in, and it took it a while to bounce back. I started getting into it around 80, more at 70, and I also got in to some lots here at 60. I didn't buy the 50 down here, and so I was up a few $100s right here, came down here again, and I was just timid to buy down there. I wish I would have doubled my average price and got into this at a little bit better price, but it ultimately bounced. And usually when currencies are underneath the lower containment band and you have some longer term, I think this was either a 30 or an hourly trend reversal signals, especially the triangle, it's the end of the move. And you have a 5-minute triangle right here also, which when it's underneath the lower band, my Fibonacci profit targets are there. It did get the bounce as I expected, but it did go about 10 pips lower than I had thought, and so I messed up my scaling. But I still made a little bit over $500 on that trade, and probably wouldn't have considered buying down there without seeing these trend reversal signals. So I'm very big fan of those of the new tool. The CAD extremely weak today. Swiss, one of the stronger ones. So selling the CAD Swiss also was a very high probability trade. You can see that when a trend is down and it comes up and touches the hourly, it makes a good trade. You know, you got a nice trade here, a nice one here. And anytime you see a trend that's down and it goes sideways for 2 hours in a very tight little rectangle shape, that's one of our entry signals. If you watch our videos, which we've had up there for months, this is a perfect example of it. And it came down here and ran out of steam. I don't have our new FX trend reversals on this particular chart, but I'll add it right now just so you can see, you know, what signals they might have shown up on the chart. So there's a trend reversal signal right here, and any of these longer term signals are much more powerful at or underneath the lower white band. So that's something to be aware of. You still want to look to trade with the trend, but because of this, you know, you might consider looking for a trade down here, you know, at the extreme, because the market is very oversold. You got a 3-hour counter trend sell signal here, hourly one here, I believe, a triangle, and it may, you know, a lot of times these signals don't immediately cause a reversal, but usually within a few hours they do, and a very high percentage of the time underneath our lower containment band. Once the weakness kind of disappears, if this breaks out of this level, you know, it's very likely to go back up to the hourly, which is up here at around 8,900. So you're going to risk 10 or 15 pips in this case to have a very good chance of making 70 pips. And you know, that's what trading's about: small losses, big wins. And in this case, you know, you can watch this chart later after hearing my prediction. You know, and sometimes you might have to get into the trade once or twice. You have 10 pip loss, 15 pip loss, and then you get 50 pips. You know, that's just the way trading is. And sometimes when these signals show up, you get an explosive move immediately with no reversal, like this one. This one wasn't immediately, but within an hour you had a 100 pip drop, and that's, you know, that happens more times than you know. So you really got to try to get into a trade when you see the signal. You know, my trade with the dollar Swiss was a little bit early, but ended up happy with the results, and it did exactly what I thought it was going to do. You don't know if it's going to reverse and continue reversing, but you know what it's telling you is that you're likely to make some money on some kind of reversal of, you know, 20 to 30 pips. What else do we got here? You know, the euro started to show some signs of weakness at 8 right here. Do you see that? And unfortunately, the dollar was strong. Weak. As soon as the dollar lost its weakness and became strong, the euro dollar fell like a rock. But at 8 o'clock is right here, and that's when the euro became weak and it rallied up here. And so when one currency's, you know, weak, but the other one's weaker, it will go up like you see here. But it, you know, you had fair warning from 8 with one of our tools, and then a 30 or 40 minute window right here to start looking for sells. One of the things you might have done up there at the highs is using a tick chart to get into that trade with the least amount of stress or anxiety. When it came up to the upper band right here, and this, you know, reading fell off a cliff right here from super strong to just mildly strong, you might have got into the trade here and rode that down and maybe made 10 or 20 pips. When it came back up to the highs here again and broke down, you're short again, moved your way, then came back against you. Your stop's right above the high here, risking 6 or 7 pips, and then it falls like a rock. And you know, you probably would have stayed into it. I don't think anybody, even impatient people, would have got out of this trade before it started going sideways right here around 48 level. So anybody could have made 50 pips on this trade, and you were alerted to the likely reversal over 40 or 50 minutes earlier, somewhere around here. And of course, strong trends don't oftentimes reverse immediately, but when they do, you can see some violent moves, you know, in the opposite direction.